It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, September the 8th, 2016. Wrapping up this first full week, an incredible first full week of the month of September. Boy, we have some great trading opportunities setting up for Friday's session. Crude oil is bullish with a spike in channel. S&P is range bound, while gold and euro are bearish going to the opening bell in Asia. As always, I have a great newsletter for you guys tonight. Plenty of reliable trading opportunities setting up for tomorrow. But before we jump into our charts and put together tomorrow's trading strategy, I want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come over here to the blog at Sideways Markets and watch the full-length version. While you're here, don't forget to join the newsletter. I'll send you an email every evening when our nightly newsletter is ready to go live. Join the mailing list on the left-hand side of the website. Below the video tonight, you can download all the charts you see me using in tonight's video. Click on that link that says click here to download today's charts. And don't forget to grab your free pass. Come out and join me as a guest for a couple days this week. Next week, grab your free pass to attend our trade room as a guest for a couple days at your leisure. And of course, don't forget, you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. I can guarantee you that. Join as a trial member and experience what it means to be a student here at School of Trade by registering for the free trial on the right-hand side of the website. Hope you guys had a great week. It's one of those holiday shortened weeks here. Kind of things got shaken up here with Labor Day weekend. Hope you guys are having a great week, though, so far. We're getting ready to wrap this thing up for a Friday session. Tomorrow, September the 9th, let's take a look at some of the news we have coming out tomorrow. First things first, though, we've got major news coming out of China. We get the CPI coming out of China at 9:30 p.m. Eastern Standard Time tonight. If you're trading the Asian session, be aware that's definitely going to be a market-moving event. And then as we go into tomorrow's session, we don't have a lot of news to work with tomorrow. Nothing really coming out of the London session. We got some minor news from our good friends north of the border, housing starts and labor force survey at 8:15 and 8:30. But that's about it. That's about it. This tells me tomorrow is going to be a get to it early and get out of there early type of Friday. You know what always happens, right? These holiday shortened weeks, the average human being, they weren't ready to go back to work on Tuesday. They're looking forward to the weekend coming up. With no major news on the schedule tomorrow, I would imagine anything after 11 o'clock tomorrow morning, Eastern time, of course, is going to be low reliability. You're more than welcome to leave open positions after 11 a.m., but I wouldn't leave any risk on tomorrow after 11 a.m., and definitely not be careful getting into new positions after 11 a.m. Eastern time tomorrow morning just because of no major news without any major catalysts. Now, obviously, who knows? Maybe we'll hear from Yellen tomorrow. Maybe we'll hear from Draghi. Maybe we'll hear from OPEC. So we'll keep our eyes and ears open tomorrow. But without any major news as a catalyst, it's a Friday, so early in, early out. And of course, don't forget, we'll be with our London-based traders in the chat room tomorrow morning at 3 a.m. Eastern time. And of course, we'll be in our live trade room with all of our advanced members as of 8 a.m. Eastern time tomorrow. I look forward to seeing you right along with us. Let's jump right in here tonight. We got crude, S&P, gold, and a little bit of euro. Crude is bullish with a spike in channel this evening, which tells the buyers to be looking for traps below prior support levels with a target going back to the highs and possibly up to complete the measured move up at 48.15 tomorrow. Buyers have control, and with such a strong bull move, we can assume that anything above the battle zone will be seen as a buying opportunity tomorrow. Buyers would love to get a pullback in the correction zone right now and then look for a move back to the highs. And the sellers will be looking to make a move back to the lows, but they have to get below that battle zone. Right now, looking at the chart right now, we of course had that 11 a.m. inventory report. Talked about this last night in the newsletter, that spike. Right, remember that spike in channel we talked about from last night's newsletter? Just a beautiful example of a spike in channel into seller failure and then launching right back up. If you followed last night's newsletter plan, you were prepared for this today, and you were hopefully rewarded right along with all the rest of our students here at School of Trade. So we've got 11 o'clock, right? Big spike up. Whenever we see news usually produces a spike. Whenever we see a spike, like we talked about last night, it's usually going to produce a spike in channel or a spike in range or a spike in wedge. The bottom line is we want to stay focused on trading with the spike. The law of three: 1, 2, and 3, right? 3 tests, and then, of course, the correction zone. As of right now, there are a lot of buyers out there right now, myself included, that would love to be able to get this price back down in this area here for a nice bargain on the way right back up. So we know that really anything, and this battle zone goes as low as 46.53. So really anything, any pullbacks here, especially to these prior swings, these are going to be some key levels of support here for those buyers. As this price comes down, trap low, seller failure, buying right back up. Watch that rising support trend line. I'm kind of piggybacking off of that channel, right? We'll call this a first channel test. We'll call this a, right, kind of a pending bull channel there. But either way you slice it, lots of support waiting down there as this price pulls back, seller failure into strength, strength into pullbacks, and of course pullbacks back up to that high. Now, heads up on targets. Targets overhead here. The high of day at 47.75 is the short-term target. That is the objective right now for these buyers, right? Don't confuse it. The buyers are hunting for the high of day. They're not hunting at this point for that measured move or that triple up. Speaking of the measured move, though, watch that C point down here. If we do pull back deeper than that C point, then, of course, that measured move will then be calculated a little bit differently here, okay? Triple up will stay the same at 48.20, but that measured move, you got that line in the sand there, right, if it pulls back below that C point as we have it drawn up right now. So buyers looking for seller failure, strength, and pullback, seller failure. Sellers right now, this is where sellers have to be careful. You're more than welcome to try to play with fire here, bears, and try to sell that down, but as like I said before, with such a big strong move higher here, any pullback here right now will be right for the taking for those bulls. And I don't think you're gonna intimidate any of these long-term buyers until we can get and stay below that battle zone. And again, that battle zone low being at 46.53. Really, really love this area here at 46.58. Would love to get that nice deep pullback, seller failure, and then right back up. A beautiful risk reward if we can get that nice deep pullback here right now. What if price goes higher? If price goes higher here, again, target going to be up at the highs there at 47.57, and then we're looking for a real strong breakout pullback to get up to that measured move. The key word is really strong enough to get that moving average up above the channel line, up above that 47.75. Don't get caught trying to buy into that high with only a mediocre breakout above that high here. And of course, we'll be watching this live in real time tomorrow morning with all of our students. Sellers, be careful out there, right? Careful out there. It's not going to be until we can get a real strong breakdown here that these buyers are going to join the sellers. And of course, those sellers will be looking for a revisit of that pre-news low that happened earlier this morning. It's a buyer's market, tool proven otherwise. Don't gamble on the short side here right now. And we're looking for seller failures on the pullbacks, traps, and of course, strength in the pullbacks going right back up to retest that high again. It's looking like a very good day for us tomorrow on crude oil. Emini S&P is bearish and trading inside a range, which tells the sellers to look for buyer failures at the highs or a successful breakout pullback at the lows. The range has a bearish bias, which means selling the highs of the range will be the most reliable way to trade tomorrow. But we can assume that buyers will be waiting at the lows to look for seller failures to go buying the lows right back up to the range highs. Trading ranges tell us that this market is balanced. Remember that. We're balanced with a bearish bias. So we will be looking to buy low, sell high, and focus on failures tomorrow until we see a strong breakout and continuation in one direction or the other. Now, as I'm recording this video right now, we've just opened up in Asia, and you'll notice we've now tested the low of that range. It's pretty easy to see here, and what a beautiful example of that pendulum swing from last night's newsletter, right? What a beautiful example of that pendulum swing. Pendulum swings down, pendulum swings back up. Again, if you followed the plan from last night's newsletter, you were very much prepared for this, and hopefully you had the strategy to make a profit from it. Looking at this now, we have a very strong move down, Very big clue here. Sellers cannot continue to move below that low. That makes it a double bottom. And of course, combine that with the top, and there's your trading range with a bear bias. Beautiful example of the 2-try rule, which we talked about a couple times last night. Buyers trying once, buyers trying twice. When they fail off the second, we're selling it right back down into that range. Beautiful example of the 2-try rule. Separation and significance. We teach this in our intermediate and advanced courses here at School of Trade. Members, I'm sure you guys were prepared and ready for that on the S&P. 2-try rule, of course, sends that right back to those lows. And then, of course, range rotation back to the high again, where we look for once, twice, and fail right back down. Now, here's the hard part right now. We're at the low of this range, which means we have to assume that there are buyers waiting. We have to assume there are buyers waiting. Now, I'm not going to say they have the most reliable trade in the world right now because of the bear bias, but we have to be careful trying to sell the low of this range. I talked about it last night briefly. I think it was, what was it, for the S&P? Was it last night for the S&P? S&P or the Euro? Both range-bound markets in last night's newsletter. Here's what I'm ultimately looking for. First of all, we know we're a bear bias. We know we can be a seller, but we have to assume that the opposite side of the market is looking to pick our pocket and buy that low back up into the high of that range, right? We have to assume, just like we saw back here, that buyers will enter, sellers will take their profit, and price will rotate back and forth. So buyers are looking for a seller failure to go back in. Buyers are looking for seller failure to go back in. Here's what we need to see tomorrow if we're going to intimidate those buyers enough not to want to touch this market. Strong breakdown, a strong breakdown. What I mean by strong is definitely not like this. This is definitely not strong enough. What I want is, when I say strong enough, well, here's a good example. This breakout overhead. Not strong enough to get the buyers interested enough here, right? Clearly buyers were interested, but they were clearly looking at this the wrong way. Bear bias into trading range. Notice how the moving average never clears above the high of that range. That's where the big problem comes in. So when I say I want to see a strong breakdown, what I'm really saying is give me something strong enough to get that moving average below, in this case, 76.5. Now that's only half the battle. Then we want to see that pullback. Pull back to the moving average, stay below 76.5, and this is where you've got to be careful. If you're a member of mine, in the advanced course under entry triggers, we talk about the second sell off the high, right? The second try here. What I'm going to assume is I'm assuming buyers are going to try to fade this move and go right back in. I'm going to let them do that. I'm going to let them try to take this back in. Then I know where their stops are, and that's where I'm going to be looking for that sell. It's a bit of a patience game here, because you have to remember that buyers will be trying to buy that low, and because it's a range, they are likely to be successful, right? Buy low, sell high, focus on failures. Buyers want to see that pullback fail. Sellers want to see those buyers fail to get that back into that range. Then, of course, I got your targets waiting below here. Ultimately, the big target here is going to be that 72 and a quarter, 71 and 3/4. It's the range expansion, right? Take the size of that range, expand it down. That will be key support. And of course, we have a measured move. Whenever we see a range-bound market, though, measured moves, right, triple downs, they're not going to be as important. Most important thing when you have a range-bound market is the range itself, and of course, range expansions. Now, what if we go higher here? Rotate back up, buyer failure, right back down again. Right back up, buyers try once, strong enough to get that breakout pullback, twice, second try failure, right back in again. Right? So we are always going to be suspicious unless we see this just rocket ship to the moon, right? I mean, that may happen, right? We may see this thing just take off to the upside, and if it does take off to the upside, then all we need is the buyers to hold that pullback, and that will be enough for us to know this range has successfully broken down, and the buyers are hunting for the high, right? They're hunting for a new balance area. They've defined a new trend going higher. So buyers here looking for a seller failure at the low. Sellers here, which of course have the bias right now, looking for buyer failure at the high. Range rotation, focus on failures. And again, don't be the one caught trying to sell that low. Make sure you get that strong breakout and the old rope-a-dope breakout pullback below that low for the most reliable way to sell below a range low. Focus on those failures and focus on those ranges.